Yeah, certainly we were in a higher interest rate environment back then. Certainly leading up to the housing crisis, we were seeing record appreciation. And oh, by the way, what's happened since then? We've seen lower interest rates and now they're climbing. Wages have increased and prices have increased. But
so, hey, welcome everybody. I'm going to take it as we're live. We're here with our bi-monthly, I guess it's bi-monthly, twice a month session that we do with David Childers from Keeping Current Matters, where we look at the economic facts that are driving interest rates, the housing market, what's happening in the nation as a whole. No clickbait here, only the facts, only real research, bringing to you from the top people in the industry. David, how are you doing?
Doing great today. Johhny, we were just talking. It feels like we just did this. It was 2 weeks ago. We were talking about, the worries of, is the market going to crash? Can continue some of that conversation today. But it's good to be back. I enjoy these times we get to spend together, and enjoy everybody that joins and sends messages and says, hey, let's talk about this. Occasionally they'll send an email to me after the fact and ask a question about something. But that's what we're here for, is to look at the facts so that if you're watching this, you can be the most informed agent on these topics in your market. That's really the goal that Johhny and I have. That's what we want to do. So excited to do that today.
And what's provided by Keeping Current Matters, beyond what they provide, is they're giving you content so you can make videos and put it across social media. And that's one of the ways that you're going to stay looking like the most informed agent in your area. And then you can put those videos into a newsletter and send it out to them and say, did you guys hear this? This is the most cutting edge news, right? So we got some good stuff in store. Y'all provide at Keeping Current Matters some amazing data. And listen, under all is the data, right? That's what everybody talks about, data, data, data. Data is so many different levels. What we're going to be looking at is some great economic data, because the real estate market is about to, I don't know, I'm not going to say nothing, because
I think let's talk about that for a second, because I think there's a lot of data out in the world. What our job is right now, and I mean everybody watching, with what we give you from Keeping Current Matters, is to bring insight to that data. I'm always talking about the national trends. Bring that insight locally. Johhny, we were talking about different markets earlier, and they're, certainly every market that everybody's in is going to be different. Your ability to say, hey, here's what's happening nationally in real estate. Let me talk to you about what's happening right here in our market is the difference maker. And I think it's what people are looking for. There are consumers today that are wondering, should I buy? Should I sell? Is this the right time? I'm nervous. I'm scared. They're looking for that local expertise.
They surely are. And listen, people want to work. They're paying you a lot of money. Yeah, I know you're worth every staple and everything else like that. And you're worth every penny that you charge. But people are looking for that exchange of value that they're giving you, not just to sell your house or anything. They're looking to be consulted, right? And I've always looked at our job as a consultant, and not just a salesperson. Right? We got enough salespeople. Be a consultant, be that expert. And this data can really help you in that endeavor. And you can pull out reports, and you can have videos done and share this awesome information. And you're able to, over time, build a historical portfolio of it. Say, well, this is where we were 3 months ago, and this is where we are now, because this is the data that y'all provide. What are you seeing out there, David? What are we talking about today?
Let's continue this conversation that we were having last time around worries of a housing bubble. And we have folks joining here on Zoom, folks on Facebook. Put your questions in that you have about these bubbles, and I'll kind of take us back to a slide that we used last time. Those that are worried about a housing bubble right now, 3 out of 4 consumers saying they believe there's a housing bubble where they live. 44% of us in the business, agents, almost half saying I'm worried about this. And so I think it's still a topic we need to talk about. I brought a few things around affordability and foreclosures, and I'm going to give you some perspective on the end around home sales. So all of this question, all of these graphics, hopefully will help you communicate where we're at in real estate. I'll start kind of right here. As of yesterday, the weekly mortgage update from Freddie Mac, they say mortgage rates jumped again due to the high inflation and stronger than expected consumer spending. The 30-year fixed rate mortgage is nearly 4%, reaching highs we've not seen since May of 2019. As rates and house prices rise, affordability has become a substantial hurdle for potential home buyers, especially as inflation threatens to place a strain on consumer budgets. So inflation, interest rates, big topics right now in real estate. The average 30-year fixed, 3.92%. Johhny, the video that I would film right now, where did we start out the first of the year in 30-year fixed? About 3.1% on January 1st. Right now, the average is 3.9%. And pick where you think we're going. Is that 4.5%? Is it 5? Is it 4? You can pick whatever number that is. I'd record a video. I would do the math on your average loan amount where you're at and say, this is where we started the year off. This is where we're at right now. This is where we're going, because it places that urgency. As you wait, it's going to get more expensive. And people are sort of, attuned to that with this jump in rates here in the first month and a half of the year. So I think this is going to be a big topic that is going to cause many people to say, gosh, we need to figure out what we're going to do and do it sooner rather than later. If you look at this graph here, 3.92%, we're right back where we were prior to COVID. I kind of said last time, we're right around the area we were at the beginning of 2020 when COVID started. You heard the quote that I just read from Freddie Mac, May of 2019, when we were almost at 4%. So we're in that range. I always remind people the last 10 years, really 2010 to 2020, we bounced between about 3.5% and 5% in the average 30-year fix. So where do I think we're going? In that range, 3.5% to 5%. Going forward for an average 30-year fix. Still, historically speaking, very, very good financing for a home, but people feel, rates are rising. We're having a rising rate conversation, and we're still below 4% in the business. If I were talking to somebody about this, my messaging right now would be this right here. Homes today are less affordable, but not unaffordable. And maybe you've heard us at Keeping Current Matters say that, but that's the truth right now is homes are less affordable given the rise in interest rate, the rise in prices, but they're not unaffordable. We always look at the NAR Housing Affordability Index. They come out with that. It measures affordability based on wages, interest rates, and prices. And we still look better than kind of the time frame that we were from 1990 to 2008. Affordability in this country is still in a better perspective than where we were back then. Sure, affordability, you look at our homes affordable as they were the last few years, or certainly during the years when we had distressed properties dominating the market in the downturn, not as affordable as that. The way you read this graphic is the higher the index, the more affordable a home is. And you can see where that blue bar is above those early years, but below where we've been the last few years. And people feel that.
That's
they
interesting.
feel it for sure.
Yeah. That's it. Look at 2006. That's when the mess happened.
Mm-hmm.
Yeah. That's when we turned the corner.
and homes were very unaffordable then.
They were.
If you think about that, and where we stand today is way better than that. So always when somebody says homes are unaffordable, my response is as compared to when? As compared to the last few years, yeah, I would agree with that. As compared to the housing crisis, I would agree with that. Time before that, no, I don't think so. And certainly the data here supports that. Adam Data came out and said this: homeownership still remains the more affordable option for average workers in a majority of the country because it still takes up a smaller portion of their pay. That's the majority of the country. Are there markets where there are affordability crises on the lower end or affordability challenges? There absolutely are. But when you look out across the country, home ownership still remains more affordable, because the other option I always say, Johhny, is rents continue to go up. And this is a look at year-over-year single-family rents in October of each year. Most recent data we've got from CoreLogic, and they've skyrocketed. So your other option is to rent, and that's certainly not an option that that I would advise people to do. Now, there's folks that need to rent, and we understand that, but home ownership is the way to go. Not for a number of different reasons. The reason we're in the business and we all believe in it, but as an alternative to rent, it's certainly a much better one.
Much rather own than rent any day of the week. Don't get me wrong. If I feel like spending a month in Sedona, I'll rent, right? If I want to spend 3 months for the winter in Florida, I'll rent. But for a main primary home, ownership is really the way to go. There's too many benefits from it. I mean, it's going to increase. Even if we go down in value, it's still going to go up in value over time, over the next 10, 15, 20 years. It's going to go up. The tax benefits that you get and the write-offs and everything else that come with it are absolutely wonderful. I was interesting to see that graph because things are still, I mean, you're at that line, right? You're at that line, and everything else, when I was really banging real estate, 2002 to 2000 and probably 12, even going through the market, becoming a listing agent for the banks and stuff like that, to see us, we're still in a better position than right before this whole mess happened. And even going back into the 90s is really eye-opening. And it's got nothing to do with price per se, do you think? Or does it? Or is that more the interest rate was higher back then? What do you think?
Well,
I mean, or a mixture of both.
Housing affordability is based on three things: prices, interest rates, and wages. Wages are the big piece of that. So when you look at that, yeah, certainly we were in a higher interest rate environment back then. Certainly leading up to the housing crisis, we were seeing record appreciation. And oh, by the way, what's happened since then? We've seen lower interest rates and now they're climbing. Wages have increased and prices have increased, but wage growth and low interest rates have kept affordability in the place it's been. And that's the simple answer for why we sit where we're at. But the reminder of that is, and I'll go back to what I said before, I think the video is, here's where we started the year, here's where we're at right now, and here's where we're going. It's just going to cost more. Johhny, we've talked about, what experts are saying for house price appreciation, somewhere between 6, 7, 9, 10%, or where a lot of the estimates are coming in right now for this year. It's going to cost more. And not using that as a scare tactic or anything like that, but we want to inform people. If you're thinking about doing something, I want to do it before it costs more.
Yeah, do it before it costs more. What we need is a good foreclosure pandemic.
Let's talk about that. That's a great segue into what I have as well. And we always bring the foreclosure data to everybody, and I think while none of us want 2008 all over again, there are a lot of people thinking, is that going to happen? Rising prices. I don't think this is the same as what we talked about, a year ago, Johhny, of is this, a housing crisis all over again? I think we're past that in a lot of cases, in a lot of people's minds. But a lot of people look out there and go, with rising prices, is this sustainable? And oh, by the way, are we going to end up with a bunch of foreclosures? And so I brought a little bit of that information, and I'll give you, the perspective that I like to give a lot of times on headlines and things that are out there. But this question, what about foreclosures, is one that we need to be educated on to be the thought leaders. This was a headline that came out in the last week or two. U.S. foreclosure activity in January of 2022. It's the highest since the beginning of the COVID-19 pandemic. Completed foreclosures hit their highest level since March of 2020. Foreclosure starts increased 29% from last month. If I'm not in the business and I'm reading that headline and I'm wondering about buying a home, that sure doesn't sound good. Doesn't sound good that foreclosures are creeping back up, and here we go again. So the research team at Keeping Current Matters always does such a good job with looking at that. This is a look at January foreclosures, 2019, 2020, before we started the pandemic, and this year in January. There are 4,784 foreclosures completed in the month of January in this country.
Wow. That puts it into perspective.
Yeah.
Right.
But expect to see those headlines.
Well, that's it, right? Those headlines are created to elicit a click, right? Yeah. Some sort of fear, some sort of interest, so you get in there. But taking a look at this, you can see it. I mean, it's half of what it was last year, and it's roughly a third of what it was the year before.
Yeah.
Right.
Yeah. And there are a lot of
So
reasons for that. We come out of the moratorium from last year. All of the things that we've talked about here, foreclosures are happening. We don't wish it upon anyone. And, I think it's, incumbent upon us as professionals to get the word out that people have plenty of equity and hopefully they can sell and not go into foreclosure. We don't want that to happen to anyone, but the scare tactic of the headline, I think, is what we need to be aware of with clients. Because if you're thinking about buying a home and you see that, you go, maybe we'll hold off and we'll let all these foreclosures come in, then we'll snag one.
right.
Just
Listen,
not
I wish I
good.
could buy a house at 2008 pricing again, 2010 pricing, right?
Yeah, right. Right.
Maybe
So
we'll
it's
see it.
it's important to have the facts, is my point in that.
100%, 100%, because this tells a different story, right? And that's why I started it the way I did, because there's so much clickbait out there. There's so much inconsistent truth that, and I think it was Ian asked a question, where is the majority of these? I don't know if we have that data, but I know they're not in San Diego, right? Do we have any idea where the majority of that is, or that's just the nation as a whole?
That's we deal in macro data at KCM. You can get that. You can go get those foreclosure stats broken down by different, Redex is a great supplier of some of that information. If you want to call some of those, if you're going after some of those, but I don't have that broken down by state and what that looks like. The bottom line of that graphic is they're much lower than the years prior to the pandemic, and yet we see headlines like that cause people, great concern.
Because I know I've seen so many people saying, "Oh, we're going to waive foreclosures," and all these people. And we've had this conversation half a dozen times about the people that were in forbearance, and it's a big scary graph. But the people that are coming out, most of them have come out of forbearance. So just because somebody went into forbearance doesn't mean they're headed to foreclosure, right? They've cured the situation.
Yeah, I've always used that circle graphic that you and I have talked about. You've seen it so many times, Johhny, and us doing this. You could do a presentation on it. 4 out of 5 of the folks that are coming out of forbearance either didn't need it, went through a workout with their bank, but they came out whole. That's nobody's talking about that. There are certainly people that are challenged. I'm not saying people aren't going to be challenged going forward, but with the equity that's in homes across the country, $57,000 and average equity growth in the last year. That's just the average growth. Don't forget about where you started from. You got 57,000 extra dollars in growth. But let me give you the one, Johhny. You're going to like this graphic. If you were going to do a video on foreclosures, and I know it's a topic maybe we want to be sensitive to, and it's really a crisis for somebody that's going through it. We want to be supportive of that. I think we can help people right now because they do have an option to sell, but this is a look right here at foreclosure activity going all the way back to 2005. And the bottom line is it's at an all-time low. And forecasters aren't saying, well, yeah, but it's about to shoot up. They're basically saying it's going to stay there. And there are a lot of reasons for that. If you remember 2 weeks ago when we were together, I showed the percentage of loans that have been approved or given with a credit score less than 620. If you remember that graphic, there's tall bars back in the housing crisis and these little bars leading up to today. Lending standards for the past 10 years have been extremely tight coming out of the housing crisis. That's why we're seeing declining foreclosure numbers. If anything, Johhny, I think we're going to start talking about maybe we need to open up some credit, make it where more folks can buy homes. And I know that's a topic that a lot of people have a lot of opinions on, but what's in the rear view mirror is a very, very tight lending market that's leading to a low foreclosure market. And I think we have to really, really understand that to communicate the issue of foreclosures in this country, or even maybe understand that ourselves if we believe, well, this thing's all about to come unraveled and all these foreclosures are going to come on the market.
Yeah, well, we need inventory.
Yeah.
right?
So
If we did open up all that lending, I mean, boy, there's a lot of people that I hear that struggle with getting their FHA, VA, or USDA loans approved or whatever.
yeah,
It's conventional cash, 10 billion over asking price, all these other crazy things. This graph right here puts it all into perspective. So anybody that is talking about, oh, the foreclosures are coming, this contradicts that. There's no
yeah.
way. This is raw data.
You can go back and use that slide that I used as well with the one I just mentioned with the number of loans given below a 620 credit score, and kind of combo both of those and start to read the tea leaves, so to speak. You got a bunch of loans that were given, and qualifications have gotten higher, more stringent, and you're seeing foreclosures decrease. It makes a lot of sense. And
Are you saying that there might be a connection between predatory lending and foreclosures? No.
Absolutely. It's one of those connections, Johhny, that I've been able to make. So, but here's a quote that I think is very, very important for us to understand about this topic. It comes from Realty Track, Rick Sharga. I quote him a lot. Realty Track makes their money on foreclosures. Here's what I will say, or what he'll say. It's very important to keep these numbers in context, the ones we just talked about. We're likely to continue seeing large year-over-year percentage increases for the rest of the year. Large percentage increases, but it's also likely that foreclosure activity will remain below historical normal levels until the end of 2022. So when you have nothing and you go to something, you have a large year-over-year percentage increase. Be ready for that. Have your clients ready for that, because there's some stuff that's going to come out that on the surface, the headline, I'm not even saying it's going to be incorrect, but it's going to be taken out of context, right? Highest foreclosures since the beginning of the pandemic. Foreclosures spiked 200% this month, year over year. Accurate, but does not tell the story of what's happening out there.
Yeah, Saul Klein, I wish he was here. He has I think he says content without context is pretext, right?
Yeah.
Something along those lines. And it's right, because it's all about the context of what's involved. And statistics, you can make them go any which way that you want, right?
Right.
You can have them tell whatever story you want. And you're right, you're 100% right. But when you drill down into it, and listen, I'm going to bank on, what was his name? Rick Sharga?
Rick Sharga, yeah.
I would bank on him because he gets paid to know this stuff.
Right. Well,
I don't.
Well, let me just, the reason I always bring that up with Realty Track, they make their money off foreclosures.
Yeah.
I'm not saying they want them to happen, but when they do,
business is good.
That's their business.
Yeah.
So these are the people that work in that business are saying, we're not going to see them this year.
Yeah. That's excellent to know, because I know a lot of people have been, and you know what, there's a lot of different factors going on out there, and we're not going to go political on that, but we might go to war over here. We might have inflation over here. We might have an issue over here. These things all could come to head, but the reality of the fact is people still need a place to live. The market's still moving forward. The economy's still moving forward. We're still working. So I don't foresee any major issue to cause it to crash or for foreclosures to shoot up through the roof.
Yeah.
There's just not. If you're in a house now, you already got the best rate.
Yeah.
Right? If you haven't refinanced,
we were talking before we started, Johhny, about investors. What does everybody in our business know, and everybody out there know? Buying a home right now is a good investment. Well, why are investors rushing into flip houses to get out there and do it? Because they know they can make money doing it. I think, and one thing I'm going to mention in the chat there, if you didn't see it, Jake dropped in there's a code for RedX that LabCoatAgents offers if you want to go get some of that data. So grab that if you want to do that. But let's talk about that for a second, because I think that's a big point. What is the opportunity in buying a home? This is from the fourth quarter home price expectation survey, the potential growth in household wealth over the next 5 years based solely on home equity. If you purchase an average price home right now, $350,000 home between here and 2027, what do you stand to gain? On average, the home price expectation report says $89,441.
That's good.
So should I buy a house in this market? Would you want to grow your wealth by $89,000? You got to pay for housing somehow. You're going to pay rent or you're going to pay a mortgage.
How much of that $89,000 do you think you would earn if you were renting?
It's
Right?
zero, goose egg. So I think this is important because a lot of people are asking that question right now. Should I buy right now?
Yes. Home is security, right? This right here is great that this is what they're projecting, that it's going to go up, which I don't know what this number is. I'd have to do some quick mathematics, but it doesn't look like it's that 18 and 15% month over month. It looks like a normal good appreciation, right?
Yeah, normalized market. Yep. Remember, normal appreciation in this country, for the last 20 years has been 3.8%. We've seen an enormous amount of appreciation in the last couple of years, expecting to see well over normal appreciation this year in real estate as well. I'll finish with this, Johhny. I was telling you about it real quick. Revealed preference theory. I want to talk to you about that for just a minute. It comes from an economist. Keeping Current Matters, I get to listen to and see a lot of economic data. Paul Anthony Samuelson, economist that lived from 1915 to 2009, was a Nobel laureate, was really acclaimed, and he came up with revealed preference theory. Okay, so he said revealed preference theory is an economic theory regarding an individual's consumption patterns, which assert that the best way to measure consumer preference is to observe their purchasing behavior. And that's revealed preference theory works on an assumption that consumers are rational. So what does all that mean? It means look at what people are doing, not what they're saying. The best way to measure consumer preference is to observe their purchasing behavior. Okay. What are consumers saying right now about buying a home? We've seen, this drop off since, the middle of last year. 26% of people, the Home Purchase Sentiment Index, said it's a good time to buy a home. Okay, wow. That's what they're saying right now, and I think if you're in our business and I told you that, it wouldn't come as a shock. You go, oh, I hear that. I maybe talked to a lot of people that have said it's not a good time to buy a home, and I just showed, Johhny, we just showed what the opportunity is in gaining just in home equity in the next several years. So that's what they're saying. What are they doing? Go back to what we talked about last week when we were together. Existing home sales just hit a 15-year record high. What are they doing? They're buying homes.
Yes, sir.
What are they saying? It's a bad time to buy. Always watch what they're doing, not what they're saying, if you want to know what's happening in the market.
Talk is cheap, right, David?
It is. It is.
Yeah, that's another excellent graph that is contradictory to what a lot of the hearsay is out there. And look at what they're doing. We're having record sales. We're having record sales years. Consumer confidence might be a little bit lower, saying it's not an ideal time to buy, but a whole lot of people are on the opposite side of that, and they're actually doing that. I do believe with that. You follow what they do and not what they say.
Yeah,
right?
Yeah. It tells a different story.
Follow what they do.
Yeah.
So that is all good stuff, man. And as far as I'm concerned, market still looks great. The lack of inventory thing is real, and hopefully that works its way out and everything else like that. Interest rates creeping up a little bit, but people still need a place to live. Hopefully wages continue to increase along with that. I said something funny to somebody today that I was talking with, my CFO. I said, man, when do I get a normal paycheck? I'm paying myself less than when I was a network engineer in 1999. Right? Time for me to get a pay raise.
I hear you.
Right. So how did I get on that? But anyways, always, David, great information, and it's real information. And that's what we need as professionals. Y'all are worth your weight, y'all are worth your fee and everything else like that. Get the knowledge to sound knowledgeable to people on what is happening on an economic front across the market, right? And then drill down to your local. Go to your state association page, go to your local association page or MLS page, whatever you got. That data is all there. Those reports are all there. You just got to spend they're not as pretty as Keeping Current Matters, man. They do make them look pretty, right? But the raw data is there, and you can make your own graph.
That's the key, taking everything that's happening and boiling it down to what's happening here in our neighborhood in the area that we're in. So
if somebody is not part of Keeping Current Matters, how do they become part of Keeping Current Matters?
you can go to Try KCM. So Keeping Current Matters, trykcm.com. Free 14-day trial. You can go check it out, see if it's right for you. Starts out at $29 a month. We do all this for you, give you all this information. So more than anything, we want to help agents be the educated choice for consumers. So
you can't even go to Dollar Tree anymore and buy anything for $1 a day. So go get some information, make some cool videos. You got all the graphics there and everything else like that. Be the one.
Yep.
Anyway, go to trykcm.com, get your free 14-day trial. If you like it, keep moving forward. If you don't, go to Dollar Tree. Anyways, everybody, thank you for joining us.
It's always to be together, Johhny. Take care.
David, peace out.
Bye.
Thank you.